Good afternoon, everybody. This is Tim Fuchs with the National Council on Independent Living, and welcome to our latest SILCnet teleconference and webinar, Uniform Guidance for SILCs. So, as always, today's presentation is being brought to you by the ILNet Training and Technical Assistance Project for SILs and SILCs. ILNet is operated through a partnership among ILRU in Houston, Texas, Nickel here in Washington, D.C., and April in Little Rock, Arkansas. Support for the project is provided by the Administration on Community Living at the U.S. Department of Health and Human Services. I want to introduce our presenter for today, Paula McElwee. Paula has done so many of these trainings for us lately and has been just indispensable in providing advice and assistance on all of the issues around these new regs and the uniform guidance. So Paula, I really appreciate you taking the time to put together today's presentation. This is one of the biggest SILCnet calls we've had in recent memory. So it's obviously a popular topic. Everybody wants to get it right, and I can't thank you enough for taking the time to do this. Paula, of course, is the Technical Assistance Coordinator for the ILNet project at ILRU, as many of you know. I know a lot of you have worked with her one-on-one. So Paula, thanks again, and with that, I'll turn it over to you to get us started today.
Okay, thank you, Tim. I'm excited to talk about what can sometimes be a kind of a dry topic because making sure that we spend the federal money properly is such an important task. So let's look at what we're going to talk about in the next hour plus. The OMB has new uniform guidance about how to spend federal money, and we're going to talk about how that relates to SILCs specifically, because this is an area that for a while was kind of unclear, so we want to bring what clarity we can to that situation, and also which aspects of the new uniform guidance have changed, what's different from the old OMB circulars that we used to be under, and how do we address those new changes, those new requirements at your SILC specifically. There are some prohibitions in uniform guidance about how money can be spent, and so we're going to talk about those too. What do we need to do to make sure that federal expenditures are reasonable, necessary, allowable, and allocable? Those are the requirements that show up over and over again in these guidelines. So we're going to look at those, and then also resources for further information to implement any changes that in your policies and procedures or in other activities that you have around how you manage money so that you can continue your research on that. And of course, you can always contact me after the fact. My contact information will be at the end, and either by email or by phone, I'll work with you on your own application at your SILC so that you can implement all of this in a positive way. On slide 4, let's talk a little bit about what the uniform guidance is. So any entity that can be a council like you guys, it can be a SIL, it can be the DSE, the designated state entity, but any entity that receives federal funds has to comply with this uniform guidance. This training is focusing on SILC specifically because there are some things about you that are different. Even if you're a nonprofit SILC, or if you're not, you're still a subrecipient under these guidelines. So that's the term used to describe someone whose federal funds flow through someone else before they get to you. And in your case, they flow through your designated state entity to you. So that makes you a subrecipient, and we'll talk a little bit more about that in a minute. The uniform guidance is a federal government-wide effort. The Office of Management and Budget has always had some regulations. We used to be bound by several of the circulars that went with the Office and Management Budget. This replaced those circulars. So they revised and consolidated all the existing circulars and other regulations around how to spend money. And now it's all contained in uniform guidance. So a tip, if anybody in your auditing staff or your policies and procedures or anywhere else is talking about the OMB circulars, the old ones were 110, 122, and 133, if that language is still in your policies, it needs to go. because those circulars are no longer in effect. What is now in effect is this thing called uniform guidance. On slide 5, then, what this is the replacement for those circulars. They were combined into a single guidance. For a while you heard this when they were developing it. They used the term super circular for a while because it rolled so many of the prior circulars together, not just the 3 that applied to us as nonprofits, but also the ones that applied to state entities were all rolled together into one. And now these rules govern the use of federal dollars by any entity that receives them. An entity is the word that they're using, but that entity in this case means organization or other recipients of federal funds. So we are all, each of us is an entity in that context. On slide 6, you'll notice that this was a multi-year consolidation. It didn't happen overnight. It took quite a bit of time. There was public comment, like there always is on federal regulations. So it was invited through the Federal Register. And what they said in the Federal Register, what the OMB said in the Federal Register, was that the purpose of this was to reduce the administrative burden for entities receiving federal awards, while also reducing the risk of waste, fraud, and abuse of federal funds. And their other purpose was to improve the integrity of financial management and operations of all federal programs. And then finally, to streamline the rules governing federal funds. And while this is a long regulation, when you look it up, we'll give you the links in a minute. When you look it up for yourself, you'll see that it's pretty long. It does streamline those rules that were in place before. So it does give you a chance to take a look at things all in one place, and each of them described all in one place, which is a much better and consistent way to handle those rules. Slide 7, the rules are found at 2 CFR 200, CFR meaning Code of Federal Regulations. So at 2 CFR 200, and if you ever lose the link that we're going to give you on how to find these, just know that you certainly can just put that into a search engine, the 2 CFR 200, and it will kick up the uniform guidance. The actual title is Uniform Administrative Requirements, Cost Principles, and Audit Requirements for Federal Awards. So that's commonly referred to as uniform guidance. Now, we're regulated under the Health and Human Services Administration for Community Living in the Independent Living Administration. Some of you might remember when we were back over under Department of Education in the Rehabilitation Services Administration. Back in that day, there were a lot of additional regulations around the OMB circulars that were found in our regulations about centers. So Department of Education added a lot of stuff into the way that those regulations were interpreted. So far, that's not been the case with Health and Human Services. So Health and Human Services has chosen to take the uniform guidance as it is, and then they will issue, if the need arises, they will issue guidance around any areas where it needs clarification. But that means we have a more streamlined way for us to look at the regulations too, because they're taking them directly from the uniform guidance, and they're not adding interpretation, at least not yet. So that's a kind of a good news, that it'll be more clear, I think, and more straightforward. If you look at slide 8, this just gives you a sense of when the uniform guidance went into effect. The uniform guidance is applied to entities receiving federal funds for new funding after December 26, 2014. Now, practically speaking, that means that they were applied to the SILCs and to the DSEs effective October 1, 2015. They also apply to the SILCs that are nonprofits as subrecipients of the funds. And the councils that are not separate nonprofits also need to meet the requirements of the designated state entity, which are based on uniform guidance, and this is a real key for all of us to keep in mind. They may vary based on the state's policies. So even though we've come out from under the additional requirements that the Department of Education had in place, many of you still have a DSE that is still under the Department of Education. And they wrote their policies and procedures around money to meet those guidelines. And therefore, they can require that you also meet their policies in addition to uniform guidance. That has always been the case. What I have seen that's been interesting is that in some states, the DSE is willing to back up a little if the uniform guidance doesn't make a requirement that has been their policy. That sometimes they're willing to say, "Oh, okay, then we'll change our policy and we'll allow that." So don't be afraid to have a conversation about what uniform guidance actually requires. But your designated state entity might get stuck on its own policies, and they can require you to meet them. They may allow you not to if you can make a good argument from the uniform guidance. All right. 9 is definitions. So in the uniform guidance, you won't see the word vendor showing up anymore. That used to be the language that was in the OMB circulars. Now they're calling us contractors. But it just still describes an organization providing a product or a service. And the payments to the contractors are not subject to cost allocation rules, but they are subject to rules for procurement. We'll come back to that. But the contractor may or may not be you. It may be the people that are providing you with the services. So you may have an accounting contractor. So you subcontract with an accountant who does some of your books. That would be a contractor, and therefore that contractor would not be subject to cost allocation rules. We'll go through this in a little more detail in a minute. A cost objective is defined. We've told you before that you have to keep track of your time by cost objective. And RSA pretty much wanted to see that by funding source. But cost objective is more clearly defined in uniform guidance, and it clearly is not funding source. That still may be your simplest approach, but cost objective is any funding that is for the same purpose, for the same people. For centers, this often means that they will be able to consider as a single cost objective both their federal grant, their Part C money that they receive directly, and their Part B money that they receive through you might be considered a single cost objective. If they can make that case, and if they have good reason for doing that, that has to do with how you allocate the time of the staff. And if all of the staff time is used for the same purpose, then it's a single cost objective. So all of the time spent on the core services, whether funded under Part B or Part C, could be considered a single cost objective. Program income is also defined, and there are some controls over how you can use program income. Now, program income is income that you secure by providing a service through your other grant. So for centers, this has been really obvious because they often create another funding stream in a fee-for-service program or in another program. We haven't really seen how this will unfold with SILCs as much, so it's hard to know exactly how much of the time you will have program income. But if your staff, because you're not doing direct services, but if your staff are working on a project that's going to bring in money, we probably should talk about whether or not it is program income under this definition. Also, recipients are defined, subawards, and subrecipients. And we'll talk about that quite a bit in just a minute. And the terms should and must are clarified. Must is something you must do. Should is a best practice but not required. And that's really important as you're reading through here, because the difference is substantial sometimes between something you must do and something that's best practice but may not be practical in your particular situation. So it would be allowed that you not do it. So you can watch that. As you read it for yourself, you'll want to watch those terms. Slide 10. The words that are repeated the most often in uniform guidance are the words reasonable, necessary, allowable, and allocable. So these are the requirements around the expenditure of federal funds. And first one is you must prove that it's a reasonable request. So when in doubt, you may have to make a case for why it's reasonable for you to do X, Y, Z with the funds, and that the price that you're paying is reasonable. Now, when we get over to procurement, you'll see that you don't have to do bids for some of your smaller purchases, except you might want to get bids or compare prices and keep your research with your record of an expenditure if you think there's going to be any question about whether or not you're spending the money reasonably. So you want it to be reasonable from two different viewpoints. It must be reasonable in that it would be expected that it makes sense for you to spend money at all on the thing that you're proposing. And then you must show that what you spent is a reasonable amount for that activity. So it needs to be reasonable from both those standpoints. You may also need to make a case that the expense is actually necessary. So how is it necessary for you to spend those funds? So take a look at that. And then only allowable costs will be permitted. We'll go through some allowable and non-allowables in just a minute. And then your expenses must be allocated among those cost objectives or funding sources if you use that term. But if you have more than one activity that you're tracking on your personnel activity report, and you have cost objectives, then your expenses have to be properly allocated among those cost objectives. And we'll talk more about allocation also in just a few minutes. The other thing that's interesting on slide 11 is that the costs must be consistent. This actually is found in the references, the 2 CFR 200.403. And the costs have to be consistent across your organization. So whatever it is that you do typically with that cost, according to your policies and procedures, must be done across every funding source. So you have to apply it uniformly, whether it's a federal fund or other non-federally funded activities, so that you can't decide to give more of the cost or more of the burden to the feds because you don't have quite enough in your state funding. You have to treat the expense consistently within your policies and procedures, and not separate it out based on where the money came from. So costs also must be accorded consistent treatment. Similar costs have to be treated in the same manner no matter what the funding source. That especially applies when we're going to talk about your indirect cost rate, and that has to do with whether a cost is direct or indirect. There's a certain amount of discretion for you to decide that. But once you've decided it, it has to be treated the same way across all of your funding sources. So for example, in some organizations, when you did your indirect cost rate proposal, the centers all had to do this. Your states may or may not be requiring you to do them as SILCs, but when they were done, they decided, oh, we'll put 100% of the time of the executive director into indirect because we feel like there really isn't any direct salary there. But other organizations look at that same executive director's salary and say, well, we feel like this portion could be kept track of separately and should be a direct cost, and this portion should be indirect. You can do it either way, but once you've decided what you're going to do, you have to be consistent going forward. So you can't arbitrarily decide, oh, that isn't really working very well for us, so we're going to change it. You can't do that mid-year. You can't do it differently. And I've also seen some of you do this. I shouldn't admit this, but sometimes there's a kind of an arbitrary movement of costs from one grant to the other because you had certain personnel over in this grant and the position was vacant for 4 months, and so you have that extra salary. So you're going to move some of the costs from the federal grant over to your state grant where that money was from. Well, you can't decide to arbitrarily move money around. You have to stay with your budgets, and you have to follow your policies, and you have to make sure there's consistency there. You have to have prior approval before you move things around or add costs. So you have to do it consistently no matter what you're doing. So be consistent in how you record things, how you document them, how you follow your own budgets and your own policies, so that there's not an inconsistency that might raise a red flag for you. Some of the other cost principles are that the non-federal entity, that's you, it's also the DSE. We'll talk about exactly how this works. But the non-federal entity, and that's abbreviated NFE, so you'll see it a lot throughout the guidance, assumes the responsibility for administering the federal funds. The non-federal entity has the primary responsibility for employing whatever form of sound organization and management techniques may be necessary in order to assure proper and efficient administration of the federal award, and all costs must be adequately documented. So these are the principles that are in that section 200.400 around what you must do. Now, when the DSE, your designated state entity, the state, is the one that receives the direct funds, then they assume the responsibility for administering those federal funds, including employing whatever form of sound organization and management techniques they feel are efficient and necessary for that proper and efficient administration. Now that kind of took us all by surprise. We looked at what was happening in the WIOA in the last changes to the Rehab Act, and as we looked at those amendments, we thought, well, there's going to be a lot more discretion on the parts of the SILCs. There's going to be a lot more opportunity for the SILCs to be separate and autonomous. I heard that word used a lot. And that's true when it comes to the requirements that are actually written into the Rehabilitation Act. But then along comes this additional requirement from the uniform guidance. And there are some things like this language that indicate that the state still has quite a bit of responsibility over making sure that you are doing things properly. And we'll cover that even more when we get into subawards because it's even more obvious there. Okay, now bidding. When are you required to do bids to show reasonableness? Well, you're no longer required to show your bidding process for products or services that are less than $3,500 over a period of a year. So if your monthly cost is $350, well then that might be more than $3,500 for the year and must be bid. But under that $3,500, either for the event or for the year, you're not required to bid. You still may choose to do it, or your DSE may choose to require you to do it. But your own policies and procedures you need to review them and decide, do you want to make a change related to this? And the DSE often has set a lower amount for which bids are required. So you need to find out what their requirements are before you change the threshold in your own policies and procedures. But 3,500 is the new uniform guidance, and as I said before, some of the DSEs are very willing to re-examine their policies related to the uniform guidance. So if you feel like that's something you'd like to see changed, you certainly should have that conversation. Slide 14. So the method of procurement are these. First of all, micro purchases. Those are purchases less than $3,500. You know, when I first looked at this uniform guidance, I don't know about you, but I'm looking at those numbers and I'm thinking, yeah, when was the last time you made a small purchase of $149,000? I mean, really? But anyway, obviously there are some entities out there that are a lot bigger than any of us. But with your micro purchases, you can award a decision to get something without soliciting competitive quotes if the non-federal entity considers the cost to be reasonable. So you must, to the extent practical, determine that it's reasonable. And then this is interesting. Micro purchases should be shared equitably among qualified suppliers if they offer the same rate. So if you're buying office supplies, if Office Depot and Staples have the same rate for the office supplies that you're purchasing, you should go back and forth and purchase some from Staples and some from Office Max or Office Depot. Does that make sense? And I thought it was an interesting addition for us to take a look at there. Small purchases are less than $150,000. You'd be expected to check the prices, but you're not necessarily to do a sealed bid process. The sealed bid process or the competitive proposal purchase only has to occur for purchases of more than $150,000. Now, there might be special circumstances where you would do a non-competitive purchase, and I think I go over that again in a minute, but basically those special circumstances would be if that the contractor that you're purchasing from is the only one in a 100-mile radius that does what you're wanting them to do, or is the only one who can provide that service to the extent that you want it. So if you can make that case, you might have a non-competitive purchase from time to time. That is allowed. You just have to make your case for it. So it is an interesting question. How do you distribute your purchases equitably among qualified suppliers if they all offer the same rate? I'm not seeing a lot of attention being given to this in policies and procedures, but it is an interesting question. And then the small purchases, the language is that these procedures are relatively simple and informal. So price or rate quotations must be obtained from at least two sources if it's between $3,500 and $150,000. But that can be written, it can be oral, it can be a page from a website. It doesn't have to be a formal process for determining that the cost is reasonable. It's a relatively simple and informal process. Still need to document it, but it's a simpler way to approach it. Slide 16, the other big change that we're seeing is that the new guidance is very clear that a single audit of federal rewards is required. They've moved the limit up. If your expenditures of federal awards exceed $750,000 a year, but they're also equally clear that you are not allowed to use federal funds for a single audit unless you have federal awards of at least $750,000 a year. So if your policies or funders require an audit and your budget for that audit has been approved, your costs might be allowed if you're doing a simple financial statement audit, as long as you allocate it properly across all of your cost objectives. But you cannot do a single audit unless you have that higher level. So for a financial statement audit, you do need to talk to your auditor about that. You may have been telling them before to do a single audit, which you were allowed to do if it was budgeted and properly allocated. And so you need to clarify you're not hiring them to perform a single audit unless you have more than $750,000 a year in federal costs. Okay, conflict of interest is also in the uniform guidance, and a lot of times the words conflict of interest get thrown about, and we have policies and procedures, hopefully codes of ethics for the center and the SILC. around conflict of interest. But you can find this language in 200.112 and on slide 17. And the federal awarding agency must establish conflict of interest policies for all federal awards. The non-federal entity has to establish these policies for its own operations, so you must have a conflict of interest policy. And then the non-federal entity must disclose in writing any potential conflict of interest to the federal awarding agency or the pass-through entity in accordance with the policies and procedures. Now, that's the language that is used in the uniform guidance, but it's interesting to note, first of all, you have to determine what is a conflict of interest and have policies for it. But the second interesting thing is that you must disclose in writing the potential conflict of interest to either the federal award if you're getting the money directly, which you're not, or the pass-through entity, which in your case would be the DSE. And you have to disclose any potential conflict of interest to them in writing. And that's a lot more specific than what we're used to seeing. We're used to seeing that as an internal policy, and we banty it about and argue about it sometimes when we're not sure about how that, whether a conflict is occurring. But it's interesting to see that you also have to engage the funder in that conversation. A little bit more about conflict of interest. We suggest you develop a code of ethics for your council members. They can sign that as they come on board. You can review that at least annually. There are lots of sample codes of ethics out there for nonprofits. And even if you're not a nonprofit, you can still do that with your council. So just search for codes of ethics and you'll find a lot of different ideas for content. We have some samples we can provide to you if you ask as well. But we suggest that you do talk about ethics, including conflict of interest, and this is a great opportunity for you to do it. If new council members in their orientation are reviewing a code of ethics and signing that they agree to those codes, then they're really aware of what those codes of ethics are. And then as well, when you look at the council as a whole, have some kind of a schedule where at least once a year you review your code of ethics again and affirm it in some way with your council so that your whole council keeps that code of ethics in their forefront of their mind. Now, your policy can be expanded to include any specific concerns that you have for your council. And a council member should be in your policy or in your code of ethics or both, should be required to disclose their conflict if they have one, and to refrain from discussion and vote if there is any possibility that they're going to benefit from the discussion and vote that's coming up. So kind of keep that in mind. Now, the biggest discussion that happens around this is this next point, bullet point on slide 18, the last one there. Being a staff or a board member or a consumer of a Center for Independent Living may not pose a conflict because you're voting for something that benefits all centers. It only poses a conflict if you're voting on something that specifically targets a single center for a benefit of some sort. And if you have a staff or board member or consumer of that specific center, which is the only center that's going to benefit, then there would be a question of conflict of interest. It's kind of a catch-22. You're required to have members who are knowledgeable of independent living, so you're going to have staff and board members and consumers of centers on your SILC. Of course, you have one that's an official representative of the centers, but there should be other people, probably will be other people on your council who have some kind of a connection to a center. That in and of itself does not pose a conflict. It's only if they're going to benefit in some direct way, the individual council member or their family in some direct way. So, for example, I can tell you that if a center was working on a building and they had a contractor who was on their board of directors, there's just no way that contractor should be involved in the conversation. But it's really hard because, you think, well, he's an expert. We can ask him some questions about it. We can, but you got to watch anything that would benefit his business, benefit him or a family member's business directly that comes before the board. That board member or that person should not be involved in that decision. That's true with your counsel. There are not very many circumstances, I don't think, where that would be the case, but you do need to be aware of it and make sure that there's not a conflict of interest, and that if there is a conflict, people disclose it and refrain from discussion. Okay, how about some questions and answers?
All right, great. Thank you so much, Paula. And I'm going to start rolling through these, and I'll look for others as they come in. Okay, the first one that I saw, Paula, was from Heidi. And Heidi asks, with micro purchases, does that mean that we can't show preference to organizations that hire more people with disabilities or a locally owned business?
Well, with your micro purchases, that's an interesting question. With your micro purchases, you can have reasons that you decide on giving them to somebody, as long as it doesn't fall into that conflict of interest area where, I don't want to hire my husband to do the work because that's money in my pocket. So I couldn't do that and show a preference, no matter who he hires in his business, or I couldn't be involved in the decision at least. So that needs to be taken away from my decision making. But when you look at the other reasons for micro purchases, there is a place in uniform guidance that specifically prohibits geographic location from being an element of that decision. And that really threw me too, because all of us want to buy locally, right? We want to encourage local business. We want to be a part of our local communities. And so for centers especially, there would be a lot of desire to buy wherever they are across the in their geographic area. You want to buy from your neighbors. That cannot be a reason for buying from whoever you want, which was interesting to me. So if you're going to want to do it locally, you still have to be able to show that it's a fair price compared to what you would get if you didn't do it locally, which is kind of interesting language, but that's actually in the uniform guidance, that you can't take geographics into consideration.
Okay, thanks, Paula. Dawn asked for examples on conflict of interest, but you gave some, so I'll just have her let us know if she'd like any more information on that. I also see we have a phone question, so let's go there next.
Okay.
We'll get your line unmuted, and caller, you can go ahead.
Yes, hi, Paula and Tim. This is Shay in Arkansas. I had to call in on my cell phone. I'm sitting here at my desk, but our phone is messing up. Under the allowable costs, I just want to make sure where you talked about expenses must be allocated among the cost objectives or funding sources. In Arkansas, our funding is I&E, and 88% will go through our, of course, DSC, and the other 12% through our blind agency. So I guess what my question is, costs must be consistent with policy procedures. Okay, so really and truly, we only have one funding source, and this really goes back to the other question. Would that be, but we have two agencies, but the source is I&E. I guess that's what I'm...
Yeah, you have two agencies, but it's from the same source, and it's for the same purpose, I assume.
Right. Yes,
right.
Ma'am. And then the other thing is, well, I guess I need to expand on that. This year, we did get a 20% increase, but the way that they did it, $40,000 of our total budget is state match. So that's a new one on me. It's the first time that the SILC has gotten state match. So would it still be?
Well, the regulations around uniform guidance do apply to all federal funds. So the I&E funds are federal funds, even though they run through the VR agency. And we haven't gotten to the part yet where we're going to talk about how you're a subrecipient, but we will talk about that before we get done today.
Okay.
So you are a subrecipient of the VR agency who's passing on the I&E funds to you. So those are still federal dollars, and so they still the uniform guidance still applies. So the same regulations around what's allowable and what isn't, and that kind of thing includes all of that. So anyway, it's a challenge sometimes to think about those state funds. If they are state dollars, then the regulations that apply would be, whatever the state regulations are around it. Usually the state regulations are very similar, but they might not be exactly the same in some areas. So that would be a good good question to ask. On cost objectives, though, one of the things that I would really suggest that you do is that you pull out of your time for your Silk staff what time is spent on fund development, because that's a new area that you can spend time on. And it is allowable under the Rehab Act, but it is an area where they are recommending that you still keep track of it separately as a separate fund objective, so that you can show whether or not the fund development activities are breaking even or better. So they're strongly suggesting, this is one of those shoulds rather than a must, but they're strongly suggesting that you actually put the put the fund development as a separate activity, a separate cost objective on your personnel activity report, your timesheet, where you keep track of different cost objectives. If you do lobbying, if your fund development allows you to do actual lobbying as the SILC, it is also recommended that you do a separate cost objective for that. And we're not going to spend a lot of time on that. That's a topic for another day. But just kind of keep in mind that if you're going to be doing lobbying with private funds that you've raised, other than federal funds, of course, because it's not allowed with federal funds, then that also would need to be a separate cost objective to keep that real clean so it's clear. But everything else you do can be under one cost objective if you only have one type of money that comes to you for exactly the same purpose. As soon as you get to doing your fund development, though, you will have other cost objectives. So if your fund development has allowed you to raise money from a specific source, then suddenly you have another cost objective that you have to keep track of. Do you see how it would continually expand?
Right, and thank you for bringing that up, because we have our first cross-disability conference coming up, and that's hopefully going to be a fun development for us. So thank you for bringing that up.
So that might need to be carved out separately. So.
Right. Thank you.
You're welcome.
Okay, great. All right, next question, Paula, comes from Sam. And Sam is wondering, how are federal I&E funds handled? Because they're allocated by VR agencies regulated by Department of Education. So in other words, do we follow HHS or Department of Education regulations?
You follow the VR agency's regulations, which will be from the Department of Education, but you are a subrecipient of those federal dollars. So they can require of you whatever they need to in order to meet the requirements that they have to meet. So they can add on requirements, and Department of Education has certainly done that, but they can also add on state requirements. So, yeah.
Okay.
Fun, but
all
true.
Right. Good, thank you. All right, we got about 3 minutes left, and I think we got plenty of time for this last question. Okay, Mike asks, some councils include center directors, or councils do include center directors. In some cases, the center directors are also on the board of directors for the Association of Centers, the state or regional association, which advocates for funding for Centers for Independent Living collectively. Does their fiduciary responsibility to the Association of Centers affect your discussion?
I don't believe so, but I always am kind of watching that, because there are many different ways that this could at some point unfold. Right now, the membership fees are considered memberships to a professional organization, and that's true whether it's your state association of centers or your national associations of centers in April and Nickel. Right now, your membership is considered a professional membership, and it has not been a part of the conversation to say that that would in any way be restricted or different. I think at some point we could see a different interpretation of that, but at this point, that's how it's been interpreted and that's how it's been applied. So that membership and their responsibility to that organization as a board member for that association is considered a part of the professional approach and has not at this point anyway been considered to be a problem, especially when it comes to, I don't know, Mike, you didn't say this directly, but especially when it comes to the advocacy and sometimes overt lobbying that happens with the, with that. So.
All right. Well, we're at 350. We're at 350, and that's the end of the questions that I had. So we'll go ahead to slide 20, Paula, and you can continue.
I'm going to have to continue a little faster because there's still a lot of content here. I know it's complex, so if we don't get to all your questions, please be sure to drop me an email later, and we'll try and pick them up at that time. So here are some key things that you need to do on slide 20 that you need to do related to uniform guidance as a SILC. So you need to look at your policies and procedures and make sure that your policies comply with these new rules. We do have samples. There's a link there for you to copy and paste into your browser to pick up a copy of our sample. It does say for SILs, but if you're a nonprofit, for the most part, those same regulations would be, the same policies and procedures would be useful to you. If you're not sure about something, like I said, just let me know and we'll make sure that we get that for you. You need to identify who's going to be responsible for compliance with these rules and make sure they get the training they need to comply. That same link gives you some of the recent, the videos from our recent training on financial management, which John Heverin led most of it with help from a couple of other folks, and it just really is solid information about financial management. So as you look at your, how you're going to approach all of this, that's going to have really useful information for you. Also, you need to look at your indirect cost rate if your state is having you do one. There are a few states where the DSE is saying they're going to stick with a cost allocation plan, which is what most of us had under the Department of Education. We're told by HHS that they want to see all of us move to an indirect cost rate instead, or elect a 10% de minimis rate for indirect costs. And we have quite a bit of training around how to do these indirect cost rates, but for the SILC, the reality is it depends on what your DSE is going to require. So find out from them, and I would encourage you to do that as soon as possible. Find out from them, is it okay for you to continue to do cost allocation through your cost allocation plan, or do they want you to develop and submit an indirect cost rate? And they may tell you you don't need either one as long as you're breaking out your indirect costs and properly allocating them. They may do their own approval. This is an area, again, where the DSE has quite a bit of leeway about how they will require you to meet the requirement of allocating your costs. So you still have to allocate your indirect costs, but how the DSE is going to have you do it is going to vary from state to state. Now, our experience is if somebody comes in to audit you from the state or from the feds, our experience is if you demonstrate that you understand the concepts, then you can have a conversation about what exactly it is that they want and how you may or may not be meeting those expectations. So you need to really understand some of these basics around costs, and one of them is internal controls, and we'll talk more about internal controls quite a bit in just a second. Your rules for time and effort reporting, that's that personnel activity report that we've talked about, those different cost objectives where you keep track of your time. Time is the biggest cost that most nonprofits have, and if you have a paid staff, that is probably your salaries are probably your biggest cost. So you need to know how are you reporting for the time and how is it allocated. and then your procedures for indirect costs, however it is that you're going to agree with your state to do that, and then the procurement requirements, that's your purchasing that we spent quite a bit of time on just a minute ago. So let's look at internal controls first. This is on slide 22, and internal controls are a standard practice. In fact, there are standards for internal controls in the federal government. It's considered the Green Book. And the Committee on Sponsoring Organizations of the Treadway Commission, which is, COSO is what everybody calls it. Both are set the standard nationally for what's expected with internal controls, and you must, this isn't a should, you must establish and maintain internal controls over your federal awards to make sure that, or provide a reasonable assurance that you're managing them in compliance with these requirements. So, so you need to have those internal controls in place. The policies and procedures that we have do adhere to these internal controls. But some basics. The non-federal entity must establish and maintain effective internal controls over federal awards that provide reasonable assurance that the awards are being managed in compliance with federal statutes, regulation, and the terms and conditions of the federal award. That's usually in your grant award document, which is an additional place where you might find requirements besides what you see in uniform guidance. And internal controls are the practices that you have that make sure that more than one person handles most everything that has to do with finances, so that no one person can get away with waste or fraud or abuse of the federal dollars. So that's what you're looking for. So it'll be things like, one person writes the check, somebody else signs the check, who mails it, how's money receipted in. It's all of those kinds of policies around internal controls. So as I said, you'll see the samples in that manual that we put together. Another area where they want to see good control is around equipment, and the section is 200.313 on slide 24. Title for equipment acquired under a federal award will vest upon acquisition in the non-federal entity as a conditional title. Now that means that at the time you acquire the equipment, the ownership, it's in your backyard, it's in your control, but that's contingent on meeting the requirements for its use. So if you lose your federal grant that bought that piece of equipment for you, the management and disposition of that equipment is up to your federal grantee. So you just need to know that your title to anything you own that you buy with federal dollars is actually conditional, and the feds have the right to take it back if you're not using it properly. So keep that in mind. If the non-federal entity is defunded, then usually the equipment is returned to the DSE, and then they distribute it back out to the rest of the IL network so that it's used for the same purpose as what it was originally intended for, and that's usually what you see happening there. Property records, slide 25, you have to have an inventory. You've probably heard this before. You need to conduct that inventory every 2 years. I think it makes more sense to do it annually just because you're, closing your books at the end of a fiscal year. It's a good time for you to go out and do inventory. It has to actually show that you're tracking the equipment that you acquire with federal funds. Now, it's good practice. Remember that consistency. It's good practice to track your equipment procured with any funds. But identify this product specifically enough that you can locate it in your site, the brand, the serial number. How much did it cost you? What was the percentage of that amount that was federal, because you may have allocated the cost of it from federal and then to other cost objectives. What date did you purchase it? And what's the location and condition of the property at the time you do the inventory? And then notice that they also include a disposition date and how you disposed of it. I have visited a lot of centers, and many of them have this mysterious closet full of equipment. I hope some of you are laughing with me as I say this, but full of equipment that doesn't work anymore, but everyone told you you couldn't get rid of it. because it was purchased with federal grant dollars. Well, that isn't precisely true. You can get rid of the item. You just have to say what you did with it and show that if you disposed of it because it didn't work, that you disposed of it properly, and if you disposed of it because you no longer needed it, that any funds that you got from selling it would go back into your grant project. So you have to show all that. But it is possible to actually dispose of property purchased from federal funds. Just have to keep track. You have to have a good inventory system. It may be useful for you to also include on that inventory the things that you buy that have less actual value but are more likely to walk away. So a lot of times that's computer equipment, tablets. They're the most vulnerable to theft, even though their value isn't so great that you would need to include it in your property record. So you can consider that. It's up to you whether or not you want to go to do that. Time and effort reporting. So slide 26. This is how you allocate your time, the staff time, across those cost objectives. So we talked about what a cost objective is and how you divide your staff time up. The form used for this is a personnel activity report. And while there have been some changes into this requirement, we are not willing yet to say, no, you don't need to do it, because we see a lot of evidence that while there are fewer direct requirements, there is more, it appears there's going to be more oversight of this. So what the PAR is your time broken out by cost objective. And usually that's funding source, but it can also include lobbying. It can also include fund development, as I mentioned. If you only have one funding source for your SILC, only have Part B or only have I&E, then you're not required to allocate your time to different funding sources unless, like I said, you do fundraising or lobbying. So that would be important. It's interesting to me that a lot of centers had looked at this time and effort reporting, and they made it a really detailed record of every single thing that the staff person did. And I saw some SILC timesheets that looked very similar. They required a great deal of information be included on the activity that was done. And that is not the intent of this time and effort reporting. This time and effort reporting is intended to be generalized and not huge specific detail. So if your DSE is saying, oh no, I need to know what you did every second of the day, all day long, I think it would be appropriate to have a conversation about a more manageable way to record your time and effort reporting. And if I can help you with some samples and some of that conversation, I'd be glad to help you with that. But your DSE does have the right to require more of you than what the federal requirements are. On slide 27, we have a sample, and so you can look at it. The rules require that the records are accurately reflected after the fact, so after the work is performed, and you need a policy that explains what you're doing, and we have those sample policies and sample forms for you as well. There were some really stringent but inconsistently enforced requirements before. The new rules, as I said, are more flexible. We believe they're going to be more strictly enforced. It may be that we can do this differently at some point in the future, but we're not seeing it yet. And 28, I think I've covered that pretty well, but that's what a cost objective is. That's the actual definition from the uniform guidance. So you can see that it's not funding source. It's a program, a function, an activity. It can be a funding source, an award, but you aren't required to do that. And when they give samples later on in their principles, they do give examples of how two funding sources can be part of the same cost objective. Let's talk just a minute about direct and indirect costs. So you're going to have to follow whatever your DSE procedures are for indirect costs and how you allocate those costs. And if they say they want you to do an indirect cost rate, then we have training on that. You can elect a 10% de minimis if you're the direct recipient, and so we're assuming that your DSE would also allow that for you for your indirect costs instead, but we're finding that the indirect costs typically are greater than 10%. And when you have a very administrative function, it would be good for you to take a look at that. So so see if 10% would be enough for you, but I think it might not be. You may be able to consider everything a direct cost if you truly have only one fund objective. But otherwise, you may need to divide up your costs. So if you have more than one fund objective or more than one funding source, as you develop more fund development, this is hopefully going to be the case for you. Then you have to share your rent accordingly, right? So when you pay your rent, it's not all a direct cost, which it may be now, but it may shift as you have more fund objectives so that it's not all direct, that your rent is split and your bathrooms, reception area, conference rooms might be indirect, and then your specific projects would be represented by the staff that are represented in those specific projects by the same percentage. That would be a typical way to do it. So you can see how your building might contain both direct and indirect costs if you had more than one fund objective. So you have to show that you are using your federal dollars all on direct program expenses if you don't have any indirect costs. So we're not really sure how the DSEs are going to treat this area of direct and indirect costs, and I hope that as you clarify that with your DSE that you'll let me know what happened so that we can kind of get a sense of the different ways that's being interpreted across the country, because it's not going to be the same from state to state. And everybody's been waiting for this one, allowable and non-allowable costs. It's now Part 200. So you can see the different ones, 200.421. Advertising is an interesting one because advertising is allowable only if. So, and most of these are things that we would do, right? They're allowable for personnel, for recruiting personnel, for procurement of goods and services, for disposal of surplus, for program outreach or other specific purposes necessary to meet the requirement of the award, for public relations. So that would be your outreach and related to other activities. And anything that you actually put into your budget when you received your award, so that could include fund development or anything that's in your spill. That could include fund development and outreach of some sort for your state. So those are all kind of interesting to see what is allowed, so that I guess other kinds of advertising is what's not allowed. So, and with advertising and public relations, anything other than what is allowed in that list I just gave you is not allowed. I know that sounds duplicate, but anyway, that's the way to say it. Some costs of meetings are allowed as advertising, for instance, displays, demonstrations, exhibits, meeting rooms. There's a list there. So some of those are allowed for the purposes of or other events for the purposes of advertising. Conferences, when it's going to be technical, is allowed. So, our conferences are typically allowed, our national conferences. Other non-allowable costs, entertainment costs. This is probably the one we all talk about the most, including amusement, diversion, and social activities, and any associated costs except where specific costs that might otherwise be considered entertainment have a program purpose and are authorized either in the approved budget or with the prior written approval of the federal awarding agency. And this is a lot different than what we're used to thinking. So this is the food, the food cost thing that we often talk about. Oh yeah, we can't buy meals for the, for the Silk, for the Silk Council because that would be an entertainment cost. I think this leaves the door open for you to begin a conversation around that with your DSE, because this says if it has a programmatic purpose, which of course your whole program is about the meeting of the council and it's council's business, and you receive prior approval, either in an approved budget or a prior written approval from your awarding agency. And so I think it would be interesting to kind of explore this a little bit more with the SILCs to see if that could be taken care of, because most of the time when you're drawing people from a statewide into a meeting that's going to last more than just a short period of time, especially some of you who have big states, it's hard to imagine why food would not be appropriate, why it would not be appropriate to have lunch served rather than have everybody leave and come back, or whatever your alternate lunch arrangements might be. So that would be kind of an interesting one to look at. Fines, penalties, damages, and other settlements are not allowed. Goods and services for personal use, including housing, are not allowed. Lobbying is not allowed. And your certification regarding lobbying, you have to have one of those on file when you receive federal funds. It says that here's what you will not do. You will not improperly influence activities like obtaining grants, contracts, cooperative agreements, or loans. You will not attempt to improperly influence employees or officers of government. You will not attempt to influence outcomes of federal, state, or local elections, referendums, or initiatives through in-kind or cash contributions, endorsements, or publicity. That you will not contribute expenses to a political party, campaign, or political action committee, and that you will not attempt to influence votes for or against specific legislation, with certain exceptions, and we had trouble finding those exceptions. So the ones that most affect us are those first two. Improperly influencing is something that's still kind of being interpreted. So we'll have to see what improper influence is, but you would have to assume that improper influence would be anything that you would do where you would, bribe somebody or, otherwise take that on. And then attempting to influence votes for or against specific legislation with certain exceptions, and I think those exceptions are typically around your purposes, and so I think that's still open to quite a bit of interpretation too. When in doubt, talk to your program officer at ACL, because they're going to be able to at least work that through with you and see where you are on that specific things. Couple more things related to lobbying on slide 34. Remember that proactive advocacy around laws that should be in place for equal rights is not lobbying and is allowed. So this is a proper use of your influence. Technical and factual presentations on topics directly related to the performance of your grant, contract, or other agreement are not lobbying and are allowed. Costs related to getting there to do your lobbying or advocacy, whichever it is, follows the same rules. So if it's not lobbying, then the travel related to it is not lobbying. And if it is lobbying, then the travel related to it is lobbying. So it follows the same. If the testimony is unallowable, so is the travel. And if the lobbying is allowable, so is the travel. So it's the same. Now, we often talk about lobbying from the standpoint of the general grant, the grant guidance, uniform grant guidance, and also the document that I just reviewed with you. But there are also a lot of requirements in the IRS, requirements that have to do with your nonprofit status. So you also need to know a little bit about what the IRS allows and doesn't allow, which is not exactly the same, because that helps you keep your status if you're a nonprofit SILC. So you need to file a report if you do use any of the funds that you get for lobbying. Not federal funds, of course, but other funds. You need to file a report with the IRS telling them that you are doing that. And uniform guidance indicates you can lobby, but just can't do it with federal money. The IRS says you can only spend a certain percentage of your funds on lobbying. That's not usually a problem. It's usually a pretty high amount. But if you're interested in kind of sorting through all the stuff related to lobbying and this link to the independent sector really gives a lot of information. They keep very current on it, and they'll give you a pretty frank appraisal about the things that they think, that they think were important. Sam asked, is there, where does advocacy end and where does lobbying begin? Are we talking about paid lobbying? Well, paid lobbying, of course, always would be non-allowable. The question would be, is it advocacy or is it lobbying? And as I said, there are a couple of things that you are allowed to do, these proactive ones on the top of slide 34, and technical and factual presentations, which you're often requested to do when a bill is being considered and they're looking at anything independent living related. You might be able to enhance the network's understanding of the network and the purposes of independent living if you can give some of those presentations that are factual in nature. But as soon as you're asking for a specific vote, then you're lobbying. So you can go in and offer technical and factual presentations to the congressional representatives on whatever it is that they're interested in talking about, and right up until the moment that they say, okay, how would you vote, then that's lobbying. As soon as you say how you would vote or how you want them to vote, then you've crossed that line. So that's the point at which it's lobbying. As paid staff people for the SILC, those of you who are paid staff for the SILC, you may be asked to do these first two, this proactive advocacy and technical and factual presentations. You may be requested to do that on a fairly frequent basis, and that certainly is allowable right up until you say what the vote should be. So kind of keep that in mind. And as I said, the independent sector has a lot of good things for you. Slide 36, other non-allowable costs include alcoholic beverages. I think we all knew that. So if you're traveling and you want a glass of wine with your dinner, just ask for a separate check. They'll do that for you, and then you can't get reimbursed for that. Bad debts are not allowable. So if you inherited a situation where your SILC was already in debt and you can't prove that the expenses were allowable and paid for with a federal grant, then you have to find another way to pay that back. You can't make contributions and donations to other nonprofits. Now, in your role as a SILC, you may have funds that you pass through to the centers as you help them to develop, develop the network and develop the services in your state. But that would not be a contribution or a donation. A contribution or a donation is what we think of as those individual donations to, buy a table at their annual dinner or whatever. You can't do the contributions and donations with federal dollars. You can't defend yourself if you're being prosecuted for a criminal or civil claim or appeal or whatever. So if it relates to the violation or failure to comply with the law or regulation or the terms and conditions of your award, then the defense is not allowable. If it results in a criminal conviction or an allegation of fraud or misconduct or a penalty comes down the pike as a result of the action, then it's not allowable. And you can find more information on all of these non-allowable costs in the guidance itself. But those are the ones that are most commonly talked about with the various activities that we all do. Some other information from Uniform Guidance. So it is now acceptable for your records to be maintained in electronic-only format. It is actually stated in Uniform Guidance that they don't have to be on paper. This probably affects your centers more than it affects you because the centers have records for consumer services that are electronic only, and there had been some discussion about whether that was okay or not, but it is okay for both program records and for financial records to be maintained in electronic format. So if you want to scan everything in and keep it electronically rather than in paper and files and boxes, you are allowed to do that. Fines and penalties that come from violations or alleged violations of the regulations of uniform guidance are not allowable costs. Rental costs for sale and leaseback arrangements are limited to what would have been paid if the property wasn't sold. And that probably comes directly from the fact that some nonprofits have created a foundation and they sell their physical property, their buildings, to the foundation for $1, and then the foundation charges them a lease back or an arrangement in some way, so that there's a cycle there of pulling down federal funds for rent, and the money's going back into the organization. And I think this attempts to take a look at one of those such arrangements and make sure that it's above board and appropriate. Home office rent is not allowable. So if you have people who want to work at home and they charge you rent, it's not an allowable expense. Temporary dependent care resulting directly from travel to conferences may be allowable. Most of us haven't gone there because it's just another complication. We deal with travel expenses of attendance and from, some of those other things, but dependence is another kind of another thing altogether. So that's an interesting one too. Entertainment is allowable only with, as I said, program purpose and if you get prior approval. Health and welfare costs incurred for improving working conditions, employee-employer relations, employee health, and employee performance are allowable costs. Now, the only place that I've seen that actually used as an argument was around providing bottled water in an office setting, saying that that was a health and welfare cost, which is an interesting one. And if you receive donated equipment, you can request reimbursement of the depreciation based on the fair value or the use of the item to meet your matching requirement, or to meet your matching requirements, but not both. So you can take depreciation as an allowable expense on donated equipment if you're not using it for match. And you will need to disclose in writing any potential conflicts of interest and violations of federal criminal law that might affect your awards. You're required to put that information in writing and get that to your funder. Well, here's some resources for you. You can find the text of the uniform guidance and lots of helpful additional aids at the COFAR website, and then also the executive summary, the Green Book, the Code of Federal Regulations. These are all your references. So you can copy and paste those into your browser and take a look at this. And if you're like me, I pull up the gpo.gov site a lot. I've got it bookmarked. And when I'm looking for something, I do a search in there to find out what was said because I want the exact language sometimes. So take a look at that. All right, here's the big topic that I think we need to just really nail our understanding of, and that's that you are, as the SILC, a subrecipient of either Part B funds or I&E funds. If you are paid for under federal funds, we believe you're going to be treated as a subrecipient, and the main recipient is your DSE, and then the money is passed on to you. Now, if that is the case, we haven't seen this. We haven't seen a compliance review related to this, and so we don't really know for sure, but we have every indication that the DSE then can measure the SILC's performance as to whether objectives of the federal program are met. These are actually in the uniform guidance as things that the entity that receives the money can require of a subrecipient. So they can measure your performance. You would still have the responsibility for programmatic decision making, and you would be responsible for adhering to the applicable federal program requirements specified in the award. Both of those programmatic decision making and program requirements refer to the Rehabilitation Act as amended by WIOA, so you can take a look at what that means to you. The DSE would set the indirect cost rate or procedure for the federal award, and then you would just have to follow whatever they ask you to do related to that indirect cost rate. You must provide access to your financial records to the DSE for audit if they choose to do that. And they can impose specific conditions. The DSE can impose specific conditions if appropriate is the language. So basically what this means is that as a subrecipient, there can be monitoring and management of the things that you're doing on the part of the DSE. I think it will be worthwhile to continue to explore this a little more. That's why I used the word may and if, because I think that we should test this a little and we should figure out where the lines are drawn, because this is another area where does one thing end and the next begin? Where does the subrecipient monitoring end and the autonomy of the SILC begin? So that's a question that we don't have an answer to yet, but this is what we believe the answer is going to be. So, all right, I had to end with that particular note because I know there may be questions on that, and questions are what we're ready for next. Tim?
Perfect. Thank you, Paula. Okay, first question comes from Heidi, Paula, and she asks, when is something considered equipment? I was under the impression that it wasn't equipment unless it met a certain dollar amount.
That's correct. So you can determine that dollar amount for yourself. That $3,500 amount is what we typically see, the same one as when it has to go to the next level on procurement. But you can choose a lower amount, and you can also choose to include in your equipment inventory other things if you want to. You're not required to, but you are allowed to do that. So typically it would be that equipment purchased at $3,500 and up. But like I said, it's the tablets that walk away, so you may want to do them too.
Okay, great. Thanks, Paula. All right, looks like we have a question on the phone, and we'll open up that line. Caller, you can go ahead. Hello? Caller, you can go ahead with your question.
Hey, Paula, this is Shay in Arkansas. And my question is, it's basically kind of a statement and a question. Thank you for the information. One thing I'd like to say for Arkansas Silk, the things that you've mentioned, we've been doing them because of where I came from before I came to the Silk. But what I'd like to know is if there's additional training or education for us as the directors that maybe people in other states are familiar with what you presented to present to our board, because I think it would help us as entities to go forward if we have everybody understanding everything that needs to be done. Like I said, we've been doing a lot of the things and have a lot of things in place, but I think it would help me to, continue to be an effective Silk and a director to maybe have some additional training, or is that something that's that would be
Yeah, let me tell you first what we have available very readily. This particular training will be up on our website shortly, and this year we have done a significant amount of Silk-related training that you can find if you, there's actually a separate Silk portal into our website where you can get that information. But if you have any trouble accessing what you want to train your board on, let me know and I can help you drill down to the exact training. But we have a lot of on-demand resources. Some of them, like this one, would be audio and PowerPoint. You can start it at a different point if you want to and just emphasize one portion of it. But all of that information is available on the website, and you have the our permission to use it as long as you give us credit for it. So that's also true with some of the things we talked about today. There are actually video segments in that financial management training, which is all posted already online, which was the fastest job of getting an on-site training up that I have ever seen. I was so impressed. But it's wonderful information, and you can take just any excerpt of it that hits a topic you want and actually show that in your board meeting as a training. So you have access to all that information. And
Thank
if
you,
you have
Paula.
trouble finding it, you're welcome, Shane. If you have trouble finding it, just let me know, and I'll help you find it.
Perfect. Thank you.
Okay, thanks you all. It's 4:29. We'll squeeze in this last question. Debbie is wondering, in your opinion, Paula, if the nickel activities and like activities, where you might travel to a conference but then do a Hill visit and speak with legislators, is that allowable?
What I typically see that I think is the best practice for the SILCs is to keep track of what you're doing on that. Remember that personnel activity report. So when you're lobbying, you keep track of that, and when and it is not allowable. And when you're not lobbying, you're attending educational sessions and you're doing your professional networking and you're doing everything else that you're doing while you're there, then that is allowable, and then your travel cost would be allocated proportionately. So what it costs you to get to DC, if you have 1/10 of the information that is your lobbying piece, then 1/10 of your costs for travel could not be allowed, but the rest would be. So that's how we typically see the best practice. As soon as you're asking your senators and representatives about specific legislation, you are lobbying, in my opinion. So.
For a specific vote on specific legislation.
Right, exactly.
Right.
Exactly.
Right.
As opposed to educating them on the need, which is a different approach.
Good. Okay, perfect. Thank you, Paula. Well, it's 4:30. We're going to wrap up on time here. I want to thank all of you for being with us today. As Paula mentioned, this and all the other topics for SILCs are on ILRU's website. This training will be archived within 48 hours, usually much sooner. And let Paula or me know what ongoing training needs you all have. I'm here on slide 42, where Paula's been generous enough to include her contact information. And then I'm going to click ahead here to slide 43. So that's the live link to the evaluation form. And you can click on that. It'll take you there now. I know some of you are participating in small groups, but I hope each of you as individuals will fill this out. Again, it was also in the confirmation email that was sent to you if that's easier, or if you need to run. But please do fill it out. Paula, thank you so much for putting this together. Like I said, this is one of the most popular SILC calls we've had in recent memory. People really wanted this information, and I really appreciate the time that you put into this and the clear examples you gave. It's really helpful. And with that, we're going to go ahead and end the call. Everyone have a wonderful afternoon. Bye-bye.
Bye-bye.